Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that have multiple catalysts in place and are at a key inflection point right now. And we are back with Siyata Mobile, SYTA on NASDAQ, and Eitan Zakarin, the CEO. Eitan, welcome back to the program.
Great to be with you again, Jack.
Eitan, so, speaking of catalysts, I mean, look, the big catalyst, for Siyata, for the stock, I mean, this has been, the story is this upcoming merger with your company, Core Gaming. And, as we move towards the finish line, obviously people are understanding the opportunity better. They understand, again, that you're doing roughly $80 million of revenues in mobile gaming. The valuation gap is closing. The stock was trading, I think, only like at a 10 million valuation, whereas people need to understand that, okay, companies in your space, in your peers like App11, they're trading at 25 times the revenues. So in theory, this could be, potentially this should be, or Siyata should be trading at 100 million plus valuation, again, based on the merger and all that. But we're starting to see the stock move up towards that gap. We had some news that I'd like to get your, maybe you can clarify this latest news about your strategic partnership with this. It looks like a Chinese-based AI development studio. You mentioned, up till now, the company has been really, your company, Core, has been focused on mobile games, right? And the last time you were on, you said that your vision is really to take the company beyond just gaming and go into productivity. And this new partnership seems to be, kind of in alignment with that.
Yeah, I think you definitely described that well. Firstly, just on the stock, I mean, yeah, of course, we've seen some, pretty incredible liquidity in the stock. We've seen definitely a nice, uptick. And I think the news that we've had, of course, of the merger the market's been very receptive to it. And I think investors are starting to, see what the potential is post-merger for Siyata, being Core Gaming. Of course, that always excites us, but we are head down and focused on business execution. This business is all about growth and scalability. And so I've said it in earlier interviews with you, and I think it's worthwhile reiterating here as well, which is that Core Gaming, in essence, is a technology company. Today, we are focused on development of AI-driven gaming apps. That includes our BI gaming platform, which is essentially a marketing platform very similar to what App11 has. But we see a much broader opportunity. We see an opportunity both in-house to scale out our technology and apply it into other verticals, as well as collaboratively to work with other gaming studios, other AI technology partners to really explore other opportunities outside of gaming.
Okay. And, it's interesting. So you're doing roughly, 80 million plus revenues with these gaming apps. We keep pointing to, App11, which is, kind of a peer, a much bigger company. Obviously, they're doing something like 5 billion in revenues. They're valued at, or maybe 6 billion in revenues. They're valued at 25 times the revenues. Great multiple, valuation multiple. How big do you think you can scale? I mean, is the idea to move beyond gaming into these productivity apps? Like what is again, we talked about this before, but what is App11 doing that you could sort of model?
Yeah, well, we very much operate in the same space. As a matter of fact, we have a partnership with App11, whereby we essentially leverage App11's advertiser base to be able to push out advertising through our mobile games, and those are our mobile gaming partners using our BI platform. But in essence, we do what App11 does on a smaller scale. And so we see a lot of our AI-driven tools being able to give us an edge, both specifically in game development, but also in publishing and marketing. That's something that we've seen a very significant growth in our business on the content side as well. And that's something that we think will continue to give us an edge as we explore, utilizing our technology in other verticals. So I think that you'll see our growth pattern here will model very similarly to what AppLovin's experienced. And I think again, we look for other opportunities to leverage our technology. We're going to be looking to basically try to find similar verticals that have a strong potential, higher margin profiles, and where we can utilize and leverage our technology to scale those businesses out, and do that on a partnership level, as well as looking at acquisitions in those spaces.
Okay, so I guess the key thing is, I mean, the investors so far, kind of all what the market really knows is, okay, you're doing this 80 million in mobile gaming revenues, these AI powered mobile games. What the market hasn't taken into account, which hasn't been included in the potential upside value, is this expansion into this productivity space. So again, you're going beyond just mobile games, kind of following that AppLovin model. Now they're doing 5 billion, you're doing 80 million. How are you going to be able to scale this business potentially to, let's just say, $1 billion? I mean, they're at 5. I mean, there's not, by the way, there's not a big gap between 80 million, let's call it 100 million, and it's only a 10x. It's not like a crazy. It's not a 100x. It's a 10x. Right. We've seen companies do that. Is it possible to do that? And what would be the path to get there? What do you think? I mean, again, I don't want to hold you to this. That sounds like
yeah, I think it's important for, I understand the question. I think it's important for whoever's, listening in to us, that they understand our business model. AppLovin, until recently, was a gaming developer, an advertising platform for mobile games, for mobile gaming publishers and developers to monetize their games. And so in that respect, we're very similar, but we take a different approach as it relates to development of games. Whereas other companies are pure gaming developers, building brands around their games. We utilize our algorithms to determine what's the best gaming sub niche to go into, using a number of other variables and factors. And once we make those determinations, then we'll go and build games around those sub niches, or partner with other gaming developers who have built games in that particular genre. And so that gives us an edge. That gives us an edge to get a first mover advantage. That gives us an edge on our return on advertising spend. And we're able to leverage that to quickly iterate games and publish them and get them out into market. So that's a bit of a different model as it relates to the gaming side, but specifically on the gaming publishing and the marketing, that's where we see a lot of similarities with AppLovin, where a lot of their growth has come. And that's where we see ourselves continuing to grow, a very significant part of our business. And we think that's only going to continue now, given the investments we've made over the last couple of years in the AI tools that we've developed. And now that we're actually deploying them and integrating them into our games and our publishing platform, we're seeing the fruits of that.
Okay. Can you talk about, like, in terms of the productivity apps that you're going to be co-developing with this AI studio? What kind of productivity apps? Can you give us any kind of insight into that? Like, what are the plans? In terms of planned products.
Yeah. So Wanzu is just one studio that we've recently announced. We have a number of partnerships with other studios, that we've even had for years already, where we constantly look to partner with them to develop other technologies that could be useful outside of just pure gaming. And so I think this partnership is one that's really very much forward thinking. It's looking to how we can leverage our AI powered mobile tools, their experience in developing smarter and faster apps that are utility apps, that people can really benefit from everyday usage. And so that really is what this partnership is about. In terms of OneZoom, that studio specifically, they've developed a number of different applications that are outside of gaming. They have one that's called, for example, Phone AI Master, which has a personal assistant. It utilizes AI technology to help you, kind of in troubleshooting and exploring different things in terms of organization, day-to-day tasks, etc. They've also developed some medtech apps, like one is called Pulse Pro, which is a monitor for heart rate, records blood pressure, helps you evaluate your health reports and output, and kind of helps you optimize your health in that respect. So you can see that there's relevance to what they're doing outside of gaming, and that's something that we see as a very strong opportunity for us to venture out. Again, looking always to how we can leverage our AI technology in other verticals.
Okay. No, that's very interesting. Are these like are they developing these, what do they call, like AI agents, stuff, these tools that help, that make calls for you, or do make reservations, things like that? Is that I think one of the things you described sounds like that. The earlier one.
They have similar feature sets to that. Again, each one is kind of standalone in what it does, but they're very robust in terms of their functionality. And this is a very fast growing market. I mean, the global gaming market's about $126 billion market. The global AI apps market, just to give you a sense, is about $3 billion last year. So that market is growing faster. It's growing at a compound annual growth rate of about 40%, as opposed to about 6% or so in the global gaming market, mobile gaming market. And so, of course, everything is going AI, right? It's just more where really the opportunities to utilize it in a meaningful way that actually translates into user adoption and enhancing productivity and functionality for people in their day-to-day lives.
Okay, but I mean, the examples you mentioned that your partners have developed, like it ranges from the kind of, I guess, productivity stuff to health tech applications. So I mean, it really goes, like, it's a full spectrum of mobile apps. I mean, it's everywhere. So you see developing products that kind of are all across the spectrum of different opportunities that you see based on your I guess research.
Yeah, we're exploring these opportunities. I think this announcement is a very good example of that, of again trying to take the AI tools that we've developed and translating them into real world usability. That's really the focus of this partnership. And so we'll continue to explore these opportunities. We have a number of other discussions in the pipeline right now. Some very at scale, very large opportunities that could really, leverage our technologies in other parallel sectors that could really benefit from AI. That's really what we're seeing. We're seeing traditional businesses, traditional sectors like health tech, like productivity, that are now utilizing AI in a way that nobody thought, was possible. And we're realizing that benefit in the adoption that we're seeing with the user base.
Okay, no, it's interesting. So so in terms of again, looking at the stock, as an investor, Siyata, I'm thinking that, again, based on the valuation, based on the multiples, your pure multiples, the stock should be worth, let's just say, $15 to $25. I've talked about that before. Again, based on your 80 million times 10 multiple, what Siyata is going to have. Or the shareholders are going to have as after the company merges. But I think the main thing is what the market really needs to know is, see, that some of that has been baked in. I mean, right now the stock should be, again, just my opinion, I think the stock should be trading probably $7.50, $8. Half of that, 15 to 25 maybe. As we get closer to this merger closing, again, the valuation gap should close. But I think what's important is that the market needs to know, okay, what's going to be beyond this merger? Once the deal closes, what is the company going to look like, not just a month from now, but 6 months from now, a year from now, because a lot of the what's going to drive the stock is that future growth potential. So I think it would be really good for them to understand what some of those future growth possibilities are. So this is one. I mean, you're kind of giving you're giving people a little bit of a clue as to what the future looks like for Siyata. I think that's a very big deal for, again, what the stock is gonna look like in terms of, again, you're doing this organic expansion into these productivity apps. You've mentioned some M&A opportunities several times. I mean, like, actually, you've mentioned we've had you on twice. You've mentioned the M&A opportunities a couple of times. Is there anything you can add more in terms of this M&A pipeline? Like, what kind of companies? Like, what are your goals in that space?
Yeah, of course. I mean, we have to be careful. We haven't actually closed the transaction with SYTA yet, and so we have to be careful what we can disclose at this point. But I will reiterate that we're seeing a lot of momentum in our core business. We see a lot of organic growth opportunities still, and we're going to continue to scale that business out. That is at the core of our company. But we also see opportunities towards M&A with businesses in adjacent verticals that could benefit from that we can utilize our platform to grow and scale out. So I've given the example before of short form video content production, for example, TikTok, and similar businesses that are operating on higher margins that very much are similar models in terms of how they market. So that's really turnkey opportunities that we see for core in terms of an M&A strategy. Of course, once we get beyond the merger with SYTA, I think shareholders can expect to hear more about that vision and strategy and how we're executing.
Okay, so let's say the merger closes next week. When do you think we could see some of these potential M&A transactions announced within the first month or so? Like, can you give any insight into that?
So first, I'll say the transaction won't close next week, but we're very actively working with the regulators to get the transaction over the finish line. Of course, this is a regulatory-driven process, so I'm sure shareholders can appreciate that we're head down and focused on getting that over the finish. Again, in regards to the M&A strategy, I'd rather not go into too much detail right now, but it is an active part of our growth strategy. There's a tremendous amount of opportunity there. And being a publicly traded company, we think there's really a very good opportunity to add accretive value for our shareholders by looking at some of these M&A opportunities and pulling them into the fold.
Right. So, again, let's assuming the deal closes, whatever, next week, a month from now, whenever it is, right? But you're going to be basically, in terms of the valuation, I mean, would you be in a position to, start moving on some of these M&A opportunities, like right after the close? Because I think what the market is catalyst. They want to see some catalyst on the horizon, which would,
So I'll say like this, Jack. Just core gaming is a business in and of itself. We've had 780 million downloads across our gaming portfolio. We've launched over 2,100 games into market. We operate in 140 countries. We have an average of 40 million monthly active users. So, we don't have a small business, and there's tremendous opportunity just in that business. I don't want shareholders to go away from this conversation that we're having thinking that we're pivoting away from gaming. We will always be in the gaming space. It's a very fast growing industry, and there's a lot of innovation happening there, and we're really positioned to be one of the leading companies in that space with our cutting edge technologies. But with that said, we do see other opportunities in parallel verticals that we'd like to be able to leverage and really fold into core gaming. And so core gaming, in essence, is going to be a holding company. We will be looking at other M&A opportunities that is part of our growth strategy.
Okay. Yeah, I think in the press release there was a quote from you saying that with core gaming that you intend to lead the next generation of AI enhanced mobile application, leading the next generation of these AI applications. That's kind of the mission statement essentially for core gaming.
That's right. That's right. Yeah. And really everything we do is technology driven, so we're very much focused on innovation. Many of our employees are ex-Tencent, coming from gaming background, living and breathing industry, understanding where the new trends are heading. And, for us, it's all about staying on the cutting edge, on the technology side, on the marketing side, and that's what we're going to continue doing.
Okay, so basically, I think the first time we had you on, which is I think almost 3 weeks ago, I guess we talked about the merger with SYTA closing, potentially we said potentially 30 to 60 days, closer to that kind of 60-day mark. So we're halfway there basically. We're from what I understand, we're like very very close. I think there's a couple of things that I think NASDAQ, I guess they need some check off some boxes, whatever. But my understanding is we're very close at this stage, or at least as of last week.
Yeah, like I said, no major updates on that front. We're just plowing through the regulatory process now, making sure we check off all the boxes, and hopefully getting this transaction over the finish line, so we can continue executing on the business and look for more growth strategies that we can leverage as a public company.
Yeah, everybody's really looking forward to this finally closing. Okay, now in terms, we'll go through kind of the terms of the deal. Now we had a question from the audience. Steven is asking, okay, so again, he's got, let's say, 1,000 shares of SYTA. So what happens to his shares after the merger closes? Now I think last time we were on, you mentioned there was really two. We were talking about the scenario where SYTA shareholders end up with 10% of core gaming of the combined company.
That's right.
There's also a path for potentially up to 20%. Based
yeah,
on.
I'll just clarify that so there's no confusion. The way the deal was structured, which can be found in 6K filing that was announced when we announced the merger, is essentially that core gaming will become the parent company, will become the main operating business. The SYTA Mobile business will drop down into subsidiary and will continue operating. The legacy shareholders of SYTA Mobile, meaning anybody who holds SYTA shares at the time of closing, as the record date, will be holding essentially at least 10% of the company. Meaning if the market cap of SYTA was less than 10% of 160 million, which is 16 million, then there would be a dividend issued to those shareholders to top them up, to get them to at least 10% holdings in the post-merger company. As it stands right now, there won't be a dividend, meaning at this exact moment, we'll have to wait and see how things are at the time of closing. But effectively, that 90-10 split is all dependent really on where the stock is going to be at the time of closing. So the higher the stock is, the more percentage ownership legacy SYTA shareholders will retain.
Okay, so it's at least 10%. It could be closer to 20%, depending on where the stock is. I mean, right now we're somewhere around $4, and the stock has been it's been just like a roller coaster. I think the first we started off at around $1, a little bit over $1. We went to 9. Then usually again we had the typical 50% pullback, which always happens. Like every one of our stocks that becomes a 10 bagger or more, they always go through that, and everybody's always surprised. They always think that these things are going to go straight to the moon, but the reality is they have to have a pullback of 50%, sometimes even 70%, which is exactly what we saw over the last 10 days. And now I think the stock is basically stabilized. We're building like a pretty nice foundation, so I think we could start. It looks like it wants to start moving up, probably as again as we get as we get closer to the merger. Okay, so Eitan, so thank you for the update. So basically, again, we see that there is a vision for the company beyond gaming. So that's a big deal. So it's not just core gaming is not going to be just a gaming company. It's going to be a big part of it. But you're looking at expanding into markets far beyond that.
That's right. Yeah, and if I could just say on the stock, it's exciting, of course, always when the stock makes a run. But I think ultimately, investors need to understand the business, and they're investing in a business, not just a stock. And as long as the business continues to execute, and we do our job as management, and really add that shareholder value, then I think shareholders can look towards appreciation, consistent growth in the stock and the underlying company. And it's not just about the quick 10 bagger. It's really about the long-term growth, as you say, seeing kind of the trend of the industry, where it's going, and for us, of course, to always look out for other opportunities where we can leverage our technology, to add that shareholder value.
No, you bring up a very good point, because look, the reality is we're online. There's a lot of people who are very short-term focused. There's the day trader mentality. Everybody wants the something that's going to double overnight. But the reality is the stocks we've had that have gone really to the moon. Stocks that become like literally 100 baggers or 200 baggers. I'm just thinking of a few of them. One of them was Axon. Originally it was called Taser. And that was like $1 stock, and people thought, okay, they're just doing these tasers, for the cops. The tasers, the zapper guns, whatever it is that the cops have. And they built up the business. There was $1 stock. It went to $10. I think it came back. But this is over years. And I think recently it was like $250 a share. They have the body cams for the cops now. They're using so this is again. And the company has gone to other areas, expanded. But I think the main thing is I think for investors, the real money is made by understanding the growth strategy. Kind of where the leadership. The vision is for the company, and over the long term, because these 100 baggers, they're not built. It doesn't happen overnight. Sometimes it takes a few years. It takes a few years for the thing to build out. And again,
what I can say, Jack, just as a final thought here, our approach is always to look for trends and to look for opportunities where we can get in as a first mover in any business that we've done in any industry, and it's no different here, right? And all the more so in a fast, dynamic, growing industry that's driven by AI. So we have a team that's constantly looking for opportunities. We have a very rich pipeline of M&A opportunities that comes to us, that we evaluate each one on its own merits and see really what could be accretive to the business. And we're not a slow grow thinking mentality. We're very much an innovative driven company, and we're always looking for large growth opportunities. So for shareholders to understand that, I think gives them a sense for where this company is going. Obviously, as we get into the driver's seat of SYTA, we'll be able to communicate more about the vision and really show how we're executing on that strategy. But I think investors will really come to understand our approach, and we'll really get excited about what we're going to be working on and what we have in the pipe.
Okay, I guess the takeaway is that the current business that people understand a little bit in terms of core gaming, this 80 million revenues. You don't intend to just stop there. I mean, the idea is that you want to really scale that in a big way, like multiples of that potentially. Again, nothing is guaranteed, but this is, in other words, this company could potentially be multiples of that size within I don't know a period of time. Okay, last question from the audience. If somebody else has, Stephen is asking, will the symbol change? Okay, will the symbol change? Have you given thought to that?
Yeah, our intention is to do both a name change and a ticker symbol change.
Okay, so we'll get to that. Okay, we'll get to that as we get closer to this merger. Okay, Eitan, thank you for the update. We look forward to hearing more. Hopefully, this deal closes the sooner the better. I mean, people are they're getting impatient. They want they want things happening overnight. I mean, that's what we need.
Right. Likewise. Yep. We're head down working on it, and we look forward to updating everyone soon.
Okay. Thank you again. Thank you everybody for joining, and we'll see you all on the next one.